Hello, welcome back. This is the third quarter. This is a quarter review video. Um, I've done three so far. Oh, this is the third one. So two so far. And yeah, let's get started with this. So, as you can see, this has been a great quarter. We've had 50% returns. This is on the percentage scale, so this is not compounding. Now we've had a net return of around 50%. Yeah, exactly 50. We started a bit iffy, -10. Covered the trade there. It wasn't going as expected, so then switched paths, and then we went all the way up. So very good. Over here, comparison to Nasdaq. So Nasdaq did end this quarter at 13.34%. However, we outperformed almost 61% of days. So I mean, this is the highest in the index that. Yeah, this is the highest index out of SPY and Dow. Did 13% this quarter, which is very high. I mean, it's been around 2 months, I think. So for 2 months, the return 13%. That's very high for Nasdaq. So we had a high benchmark. However, we basically more than doubled this. So you can see we're at 50. Over here, the S&P 500 didn't do as well as Nasdaq. Still very good, almost 11%. We did outperform 55% of the day, so not in the 60s, but anything above 50, I consider really good. Over here, we have Dow Jones. So Dow Jones was the worst one. It did 6.3%. 58 however, so that's good out of days. And then really, I mean, we also basically 44% outperformed this, so incredible. Over here we have everything. So I mean, you can see really in the beginning over here you had Dow Jones has always been bad this quarter, not very good. Nasdaq did start to fall quite heavily, and then it recovered quickly. And then you also had SPY kind of in the middle of all this. So over here you have our daily percent gain this quarter has been 1.47%. That's very, very high considering our goal is 0.17. This is kind of our goal for everything. Since inception, our daily is around 0.37, so it's still very high. Over here you have kind of every single day how much we've gained. You can see it's kind of in the middle here, and then you can see some big spikes here. So this is where we gained so much. I mean, you have 14%, 5%. These were neutral almost. Then you had around 8%, and then you had probably around 2 here, then 10, then 8, 3. Over here you had almost a 5, and then you had a bunch of neutrals. So we didn't have that many reds. That was kind of in the beginning, so very good. Over here you have the red days, the neutral. So here we finally did pass the red days. We passed them by quite a bit. This was mostly in the last 2 weeks. We passed the red, and then we went up. We've had almost no red days since after like the 2 first weeks. So almost the majority of days were almost all green or neutral. So profitable trades this quarter has been the highest I've ever seen it. I've had 85%. My average overall is around 72, which is pretty high, but I mean, this is the highest I've ever seen it at. Over here, so our mean gain, this is also the highest, 3.3% on a green day. And then our loss rate -1.4. So I mean, we do have higher losses, but our gains are incredibly high. Standard deviation, due to those high numbers, is also going to be high. It's less than 4. Over here we have S&P. So the S&P is always kind of in the gain and losses are often very close to each other. Sometimes the losses are greater. However, its standard deviation is quite a bit lower, and it also has often a lot more green days than red days. So it kind of outbalances it. And then over here you can see, so we're managing risk. Almost basically twice as good as SPY. You can see, like, what I mean by that is that we are gaining respectively twice as more as SPY. So like the idea would be that on a green day SPY earns 1%, well, we're going to be earning 2%. On a loss day, however, the ratios here, right? So if the losing is 0.5 on a red day over here, then we would be managing basically half as that. So I mean, this is kind of just the ratio between the two. So like 10 and 5, right? So that would be 2. Here it would be 2 and 1. So really the idea is that the ratios between the two, we want our ratios to be better, because that means that we're managing respectively. However, this doesn't take into account standard deviation. That's later in the next slide. Over here you can see that our losses could be -4. So I mean, right now they are -1.4. They could be -3 though, and then our gains could be 1.5. So you could basically half our gains. Yeah. Over here, so you have the standard deviation difference. So this is what I mean. So our standard deviation is three times higher than SPY. Our difference from before is 1.3. So our difference between these two is 1.3. Over here you have our mean transactions. So this would be like a buy, a sell, anything like that is 0.8. And then basically day trade just basically means that the time if I'd open a trade and close it during the same day, that would be 1, and it's only 0.2, so very few, is barely any. I think normally our average is around 0.5, so that's 2.5 a week normally. It's a lot less, around 1 a week, which is very little. So this is what I've invested in this quarter. It's not been as diversified as other quarters. However, I just kind of concentrated the most. So here, one thing that I noticed is you have SMST, so 2x, negative 2x MicroStrategy short. This is kind of what brought me down in the beginning. Then I left it. Then we went on to the HIMS play. So the HIMS was quite early on. This was after the Novo Nordisk news release. So after that, I went in and basically just held all the way to the top. I did do a couple of trades though, just like minimize the risk after I started gaining a lot. So I did do quite a lot of trades there, even doing more than my SMST. And I did a small Reddit play, only one trade, and that kind of ended a bit red. And then I also did Super Microcomputer negative 2x short, and then that also worked pretty well for me. Over here you can see kind of how it's gone. So SMST has been a 50-50, so 50% of my trades have been good, 50 bad. 100% of my trades on HIMS have been good. This is quite impressive considering, I did ride most of it all throughout the beginning. And this is also like, if I'm holding it through, it's only one trade. I've done quite a bit of trades through in this, probably around 4 or 5. So, I haven't been able to lose there yet. And also traded at the peak, and also like buying dips and closing out quickly. So that was a good play. The Reddit play, I kind of just, decided to get out of HIMS because, it's so high up. And I'm like, all right, let's try something else that seemed a bit undervalued. Then it started to drop a lot, so I left it. I left it quite quickly. And then after that, really after the Reddit, I just decided to go into Super Micro, negative 2x. So, it's quite rallied a lot. Seemed like an easy shorted it, got my gains, left it, then it started to go up again, shorted again, repeat the process and just make money. So pretty easy. Over here you got the beta. So the beta, we actually did have a neutral beta this quarter. So that's quite good. Having neutral beta is very good. It's helpful in that you don't have to take the benchmark really into account, because really in alpha, when we use alpha later on, here in the next slide, I think. Yeah, so you have the Jensen alpha. So really in the alpha, what you do is you mostly want to, once you have your return, then you have minus the beta times the benchmark return. And so if you have beta of 0, then it's really your return is the only thing that's counting for your alpha. Now having a beta 0 is quite hard because beta is your covariance divided by the variance to SPY. So how correlated are you with SPY? If you're 1 with SPY, then you're exactly at SPY. If you're 0, right, then you're not correlated. You're basically neutral. You're risk neutral. You're uncorrelated. So we were pretty uncorrelated this quarter, which is good. Then we have a high alpha. This is the highest alpha I've seen we've had. Yeah, pretty good. Over here, the Sharpe ratio from this quarter. So this is only in the 2-month time frame, but it's 2.2, so that's very high. That's good. Over here, this from SPY is 1.43, which is still very high. We did outperform it though. And then over here, you have the Sharpe ratio estimated. So our Sharpe ratio estimated is 5.9, which is very high. SPY's is around 4, so we basically outperformed it by 50%, which is very good. And then you can see the Sortino ratio, which is just the SPY ratio, but instead of calculating both your positive and negative standard deviations in your daily standard deviation, right, you only calculate your negative. So you want to take away the positive, which is the idea is that like when you gain a lot, right, you don't want to count that against you because you're gaining a lot. So if you take the gains out, which we gained a lot this quarter, you can see the Sortino basically is huge. It's 17.3. If you're looking at SPY's rate from before, 5.9. So that's 6 basically. This is 17 or 17. So, not 3 times higher, but close to there. 2 point something. So that's very high. I've never seen something this high. If you look at SPY's right now, it's 6.3. So, even close to also 3 times higher. So, this was 6.3 for SPY, taking out the upside. And then SPY's here is 4, so it did increase by quite a bit, but incredibly high for us this quarter. So expectancy ratio, so really just to see if it's just an idea of like how many profitable trades you have and your mean gain and your mean loss. If it's viable in the long run, 3% it's positive, so it's very good, viable in the long run. And this is our overall portfolio return after fees this quarter. So the fees, right? The fees would be like transaction fees I have, that sort of thing. And the only fees I currently have are just the exchange fees. So like, whatever amount of cents you have to pay or per share on certain ETFs and stuff. It's normally very low, probably 0.0 something percent. I don't know. But yeah, this is after all the fees, like all the operational fees. Then afterwards, if I'm taking commission, you could have fees there. For example, in a quarter like this upcoming quarter, I'd probably take a 5% initial, and then you have 50% on top of SPY. SPY returned around 11%. Let's just say 10%. So then that's 40% on top. So I would take a 20% fee on that. And then you also have the 5% initial if you just added in this quarter. So, in worst case scenario, you're looking at having a 25% return for this quarter. SPY would have 11. So, you'd still be pretty happy. And I'd be happy because I get a big return and I also get a good big commission. So the commission incentivizes me normally to just outperform SPY. And so to reach SPY, because if I don't reach SPY, I don't take that 50% commission. So it motivates me to outperform SPY and take that commission there. So yeah. So this has been a great quarter. Hope to see you next quarter. The next quarter is probably going to be around 2 months and a half, from early June to mid-August. I'm probably on vacation, so you're going to notice probably the recording setup's going to change. Spain and Austria, so it's going to be a fun vacation after this good quarter. Basically, we pay off that trip, and yeah, going to start school again mid-August, so that's going to start college, and then yeah, hopeful for the future. Hope more people come in, and great. Hope to see you next quarter. Contact me. You got email, LinkedIn. Anything, comments. Anyway, it's great, and hope to see you next quarter. So the next quarter is going to be starting after this week. So I think around next Friday, this upcoming Friday, you could say. And then I'm going to start on Monday. So it's going to be a 1 week buffer time frame, you could say. And yeah, so see you.